Alright everybody, Stocks by the Numbers, welcome back, and we're doing a quick update here on FuboTV Incorporated, ticker symbol FUBO, listed here on the New York Stock Exchange. Stock closed $1.41, down 2 cents, about 1.4% on the day, and a lot of people were wondering, hey, how come nothing's happening? We're green here on the day. Understandable. We can see that what happened, just a quick recap, we had this big long-term descending wedge that we were eyeing, right? And then we started to climb up and break out of the wedge. We had earnings. Of course, the company beats yet again because they were a beast. Then right here, we had the big spike up to above $2 here, hitting a high of 218 on the news of the appeal, not the appeal, the initial ruling going in FUBO's favor. And of course, they appealed, and trial now set for October of next year. So we're going to technically have a little bit of time before we may hear some news about the actual legalities going on behind the scenes with this whole situation with Disney and Fox. But the company itself has been pretty solid, if you recall. If you've been keeping an eye on these earnings numbers here, I mean, on the revenue side, 368 million estimate, they post 390. 381 million estimate, they post over 400. Estimates up to almost 400, they post 410, right? So the earnings have been very solid here, and this was the initial breakup into 300 million. Now we're already basically up to 400 million, but again, estimates 286 million, they post 311, and of course the losses, whatever restructuring they did when they initially got beaten up, had to go through the reverse stock split, apparently it seems like at the moment that storm has passed, and now in my eyes it seems like FUBO is on the up and up. I mean, the numbers really are pretty impressive. The subscriber growth is very nice, whether you're looking at quarter over quarter or year over year. In my eyes, the market cap is a joke. The stock can easily double, if not even triple, from this level. That would bring it to the low fours. I've mentioned multiple times, in my opinion, I think this is at least a $4 or $5 stock. And again, before we started this whole downtrend, and we've been quiet basically since the ball dropped, the stock ran up to almost $4 twice on its own merits. So I just want you to keep that in mind as well. But if we look at the estimates due out in about 3 weeks here, it looks like the first day of November, we can see EPS estimates of a loss of 17.7 cents a share on revenue of 376.759 million. So first of all, couple of things. This would still be significant growth year over year, because again, if we go back roughly 4 quarters, you can see this time last year we brought in like 311. We were climbing up. Obviously we had the big breakout quarter, but again, this time last year we're at like the low 300s. Now we're potentially going to post the high 300s again. But of course, a situation like this is very delicate. So, of course, Wall Street wants to see a beat on the top and bottom line here. But in my opinion, even if the company was to slightly miss this revenue number and post like 370 million, that would still be phenomenal growth year over year if you look at it, going from 311 up to 370 million. So even if they happen to miss the revenue side, I still think that the growth is going to be there. But based on what we've been seeing from the company, in my opinion, 376 million really shouldn't be an issue. And the loss of 17.7 here, this is for Q3. So this time last year, we were estimating a loss of 32 cents a share, and they posted a loss of 29 cents a share. And now we're up to minus 18 cents. So what Wall Street wants to see is that the losses are being kept in check. They know that, well, in my eyes anyway, in my opinion, it seems like they know that the revenue is going to keep growing. So right now, everyone's eyeing these losses to make sure that the company doesn't hit an iceberg and they keep the ship on a straight course. Because what Wall Street is waiting for and salivating for is for this company to be very close to going net income positive. And then once the company actually becomes profitable, then it's going to be off to the races. This is why, in my opinion, the time to analyze, accumulate shares, build a position is now before that happens. And here at $1.40 and change, in my eyes, I love it. If we do happen to come back down here and retest again, we are looking at 138, maybe a break to 136. Not a big deal. And even if it does happen to pull back to 1.25 and retest this support trend line, I still like it no matter what. That's basically how I feel. And again, you're probably not going to get any news about the trial for about a year now. So now we're going straight back to how is the company, how is the stock performing, what are the numbers of the business, is the business growing, are they beating earnings, which they've been doing. So this is why I feel that this kind of whole quiet little consolidation period is over, and now I think we're going to be stepping on the up and up. But I do have a feeling they're going to kind of flash break it down before having a little climb up going into earnings. And if we do happen to bounce here and climb up to this trend line here going into earnings, you can see you're looking at about maybe 146, 147 would be a break on that. And then if we happen to get some good numbers, we can immediately jump up here to about 180. But technically, we should kind of keep making these higher highs. So we may see a spike up here to, I want to say like 230, 2.5 if we get good earnings again, which it seems like we are. And if we look here, we can see revenue is on the up and up. Look at that net margin percentage coming out of the basement, climbing up to only minus 6.5%. Of course, we're expecting a slight dip here in losses now for Q3. But then after that, I believe we're on the up and up. Let's look at them. And we can see, look at revenue now, even after this quarter, expecting to jump up to almost 450 million and kind of hang out there now going into the tail end of 24 and the beginning of 25. So the company's still expecting good growth. And we can see also that on the EPS side, to close out 24, we're expecting a loss of about 15 cents. But remember, the last time we were at 14 cents, they posted a loss of only 8. So that's why even here with a loss of 18 cents, maybe they'll post a loss of 14 cents. And then on a loss of 15 cents, maybe they'll be able to post a loss of like 9 cents or something, right? So if we can really kind of pull in the reins of these losses while maintaining this beautiful revenue and subscriber growth, this is why I'm saying maybe 2025 is going to be the year for FUBO. And while we initially had a nice short-term return, because we initially looked at it on this channel down at like $1 and change, and the stock ran up to like 380 something. So, I mean, percentage-wise, that's phenomenal. You really can't ask for better than that. But a lot of people thought it was just going to keep going. And the business itself, in my opinion, should have driven the stock up higher and higher. The problem was, again, these three companies came out of left field and decided, oh, you're seeing success in sports streaming? Well, guess what? Now the three of us are going to team up, and we're going to just start doing exactly what you're doing. That's okay, right? No, apparently it's not okay. Hit him with the lawsuit, and now this is the problem. This is what I said. This is why, in my eyes, I think the business seems to still be solid, but now you may not see much action for the next 6, 9, 12 months until all of those legalities are put to bed, and then we can get back to business. But the explosion may even be that much better, because even as we're looking at these EPS losses here tightening going into 25, if it's this time Q2, Q3 next year, then the company may be right at the border of profitability. So then you're going to have potentially the appeal kind of, getting quashed and getting denied, and it goes in FUBO's favor again, and hopefully you're going to have continued revenue growth that whole time, and you're going to have a company that's about to go EPS positive. So this is why this stock could remain quiet here at 2 and change for the next 12 months. But then if those numbers all climb as we expected, and then the trial goes in their favor, I mean, the stock may immediately shoot up to $9 or $10, in my opinion. So that's something to keep in mind, in my opinion. But I always said what I liked about FUBO, and that's why here in the numbers, there's not much to analyze, but I did want to do a quick update here, just showing some, obviously, this recent short-term support trend line that we broke below here. Tried to regain it. You can see we got right back up to this top resistance trend line, but then we broke down, rejected, dropped back below that support. You can see multiple rejections off the 20-day, but we spoke about these slightly slightly higher lows. So again, in my eyes, 138 right now seems to be the level to watch. If it does decide to break, you can see 134. And of course, over the next week or two, we can see about 1.25, expecting the run up on anticipation of these earnings back up to at least 1.5. I'm expecting them to beat earnings. I'm looking at least 180 here up to this. if not retesting these highs here of potentially 220 or making higher highs up here at 270 or something. If we draw up just straight from these tops, 158 up to 218, if we go to the top of that, obviously this explosion would be massive. That would bring us back up to about 3.5. So I'm not exactly sure if that's going to be the mark that the stock is going to go to, but 158 potentially cutting across the bodies of those candles here, as you see. If we do have a shoot up again, you can see that'll bring us to about 320, 330 a share. So only time will tell where it wants to stop and potentially reject, where it wants to break through and start to climb up to, previous levels. Even a gap fill right here. When we initially had this drop, you can see we had a low here on these candles of about 240. So if we draw that 240 across, I mean, that'd be a good level to go back up to as well, right? We run up to 180. We break through resistance on a good earnings beat. We run back up to 239, 240. We retest this level. And then maybe the stock quiets down a little bit. But in my opinion, I like it overall. I really do. And we still have a market cap of sub $500 million, right? Again, people on YouTube, again, I'm not trying to come after you, but when a stock like ASTS or Palantir or what was the new one? Rocket Lab, right? All those stocks, it doesn't matter. They can run up 800%. The market cap is $8 billion, even though they're barely doing business. And it doesn't matter. The stock's going higher. You don't know what you're talking about. You're a hater. Okay, fine. FUBO's been kicking ass and taking names. Company's bringing in almost this much a freaking quarter in revenue. So you understand? If you're going to hype up and jump on that bandwagon of all these trending stocks acting like fundamentals aren't important and we can just take a company to 10 billion, 50, 80 billion market cap, it doesn't matter. Money's not real. Well, then this stock should easily be $9, $10. And again, that's based on your logic. That's based on your logic. But again, if it's not a Wall Street bet stock, it doesn't get that type of momentum. However, I will say this in defense of fellow YouTube content creators. I have seen a couple of channels speak about FUBO. A lot of those guys and girls, they see what I see. I think there's one guy who only talks about FUBO. So, something like that, you have to give credit where credit's due. But in general, I'm sure you can understand my argument. I mean, a company like this, we can easily bring this up to 2-3 billion, can't we? Is this company not worth a couple of bill? Seems like a very easily answered question. So, in the short term, can you see an explosion back up to 2 and change? Yeah, absolutely. So this stock right now could go from 140 to 240, which of course would be a phenomenal trade for you in the short term. If you're able to accumulate shares, build a position for the long term, in my opinion, I think it is going to pay off very well for you. But that's just me. Let's look at stock charts real quick. I'll let you go. And we can see how the RSI has kind of been pulling back, but slowly stepping up here as the company's kind of been making those higher lows, right? So it seems like it wants to slowly keep going up. And I know some people even draw trend lines across on the RSI sometimes, and you can see that it's kind of pulling back, potentially getting ready to bounce. So we might climb this RSI back up to about 50, get back to the middle of the road, which could translate to another kind of retest, maybe back up to the 50-day moving average, 155. However, this right here, another retest to the mid-Bollinger Band, 152, would also kind of be showcasing that we're in this kind of tightening triangle that we drew out, right? We're in this kind of triangle. So we can maybe hit like 152 and then stop and have a little rejection and just kind of tighten. So that can happen too. We may just tighten here, and then as we go into earnings, we can start to climb up. So we may not have the break to 125. But again, if we turn around hypothetically 2-3 years from now and the stock is like $8-9 a share, you know, you're probably not going to say, oh, I bought it at 141 and it pulled back to 125 after I bought it. I'll never forget it, right? Like something like that. You know what I mean? In the moment, it stings because then you start to beat yourself up. Oh, I know, yeah, he was pumped about it. I was watching it. I bought it at 140, and then it freaking pulled back to 125. I could have bought, whatever, 18 more shares. I could have lowered my cost basis by 8 cents or whatever. So in the short term, it immediately stings. But you have to deal with short-term volatility and hopefully get that long-term growth. And again, looking at the numbers, something like FUBO, looking good in the long term. And we can see the MACD, we were dropping, and now we had the curl, and now we're completely flat here, potentially getting ready to cross or reject and go lower. So right now, it's kind of in the in-between phase in my eyes. So you may have to give it a day or two to see, does that MACD cross? Does it pull back and does it break the support trend line and drop to the next one, right? Does it continue climbing, get back above the moving averages and start to retest these trend lines? So we have to see what's going to happen, but we have earnings in about 3 weeks. My opinion, I'm pretty bullish. You can see also Bollinger Bands. This is why I like them as well. You can see bottom Bollinger Band 1.25, right on the dot, right where that trend line is. So maybe it'll break down again before it bounces and goes up. But if we are symmetrical triangling, then technically we can break up as well. So we may get some tightening, as we said, and then we may see a break up like to the 160s, maybe the 170 mark here, 200-day, and then we'll get the earnings report, and that'll decide whether the stock keeps going up and tries to get back to 2, or if it pulls back and we drop back to the mid to low ones. But I'd give them the benefit of the doubt. I am very surprised, though, that we had the news of the initial ruling going in their favor, and then you can see the stock came right back down below the 200-day and tried to retest and just immediately rejected hard and pulled back here. So this is why I'm saying we may have had a lot of people who stepped in as a trader, saw what was taking place, got the news, bought on the rumor, sold on the news, right? And now we're like slowly stepping it down, flattening, consolidating, dropping it again, consolidating, potentially dropping it again, consolidating, and then bouncing, going into earnings, right? So this is why we may have to deal with these kind of big old waves here, but I think it's going to work out. MACD flattening, RSI 43. But yeah, right now it's kind of in that in-between phase. The next day or two, again, will probably give you a little bit, you know, of a clearer picture. Does look like the MACD actually kind of crossed to the downside here. So this is why, again, bottom Bollinger Band on the weekly, 99 cents. It really shouldn't go that low. But you can see on the longer term time frame, we ran it kind of back up to this 50-day, and you can see that's where we had a rejection as well. So this is why right now the company's struggling, and they're keeping it quiet and kind of brought it back down to where it was before kind of this hype started to come out, if you will. But in my opinion, the company's been rolling on all cylinders. So they can keep it as quiet as they want for the next 3 weeks. If and when, in my opinion, FUBO comes out and beats earnings yet again, they're going to be unable to deny it, and it's going to have to pop up and retest, and it really should break above those moving averages and start climbing into the 2s and whatnot, and get back to kind of these previous levels that we saw throughout 23 and very early 24 before we decided to beat them up for 3 other companies having to team up to take them on. You know what I mean? As a businessman, in my opinion, and this is my argument that I made when we first heard about the news. In my opinion, that is like a bad move for Disney and Fox, right? Those are media conglomerates compared to something like a FUBO. And you all have to hold hands and kind of, you know, jump into the deep end together to go into this whole sports streaming venture. Meanwhile, FUBO, again, they did their restructuring. They got the losses in check. Subscribers growing like crazy. Revenues growing like an animal. We're getting closer and closer to break even. Potential net income positivity. FUBO doesn't need a helping hand, right? But the 3 of them had to team up to take on FUBO. That's what I mean. In my opinion, if I was running a fund, I would have shorted the crap out of those companies. but that usually ends up biting you in the ass. But I'm sure, again, from a business perspective, I'm sure you can appreciate, I'm sure you can appreciate where I'm coming from with that. I'm sure that makes a little bit of sense. But the RSI did recently run up on the weekly, and you can see we pulled back now, kind of middle of the road here, sub 46. So right now, again, we have some technicals kind of lining up for a little bit of a run up, but we also have an argument for a little bit of a drop down. So maybe like this time next week, we'll see more of a play out. You know, if we come back down here and get close this time next week, then we can say, obviously, that, yeah, we're probably going to retest and then we're going to bounce, you know, that original theory was correct. Or again, this time next week, we can be here. And then we can say, okay, it got above the moving averages. It's retesting this resistance level here. So we may have a breakout. And if we do, we may be on the way up to 180, maybe even $2 going into earnings, right? So we have to see where we decide to take it. But even markets, I feel, have been very rocky, very uncertain, right? All of a sudden we're down 300, 400, 500 points. Then you wake up today and we're up and everything's okay. And I just feel like, even though it seems like big moves, right? 120 points on the Dow, 300 points on the NASDAQ. It seems like big moves. But I have a feeling, in my opinion, I think we're kind of just going to go up a little bit, and then we're going to go down a little bit, and then we're going to go up a little bit, and then we're going to go down a little bit. I think that's the kind of environment we're going to see over about the next month going into these elections.